budget about the outlook for inflation and the outlook for the economy. It shows that the RBI and the government are on the same page in terms of how we view the economy. It also means that the budget can be seen as conducive to non-inflationary growth. The RBI has highlighted some of the points we've been making about the budget, which is that the quality of fiscal adjustment in the budget is very good because it shifts expenditures from revenue and what's called public consumption towards capital expenditures. The RBI also recognizes a point we've been recently making that with the 14th Finance Commission transfers, one should look at the public finances from the point of view of both the centre and the states, and from that perspective, the fiscal deficit, revenue deficit, capital expenditures are in fact going to look better, and the performance is going to be better than by just looking at the central government finances alone. So all in all, I think this is very welcome, and it shows that the RBI and the government are on the same page in terms of how we view the economy and what the economy needs.
Right. So also the multi-policy framework that you now worked out, you have an inflation target over there. So given those kind of commitments, do you expect more space to be created for a downward pressure on interest rates over the next 3 to 4 months? Can we expect more, sir?
No, first of all, that's a good point. I also wanted to emphasize that we have now in fact codified our shared concern about inflation, our shared assessment in this monetary policy framework agreement that the government and the RBI have signed. It's merely continuing what has been the practice in the last few months and very much consistent with the Urjit Patel Committee report. Now, the outlook for inflation, it's in the budget and in the economic survey, it's about 5 to 5.5%. And as long as those continue, the RBI itself has said that this is, in the January statement that this will be, it represents a shift in the monetary policy stance.
But the exact timing and magnitude of cuts will, of course, be determined by the data going forward.
Sir, but what about the fears of inflationary pressures returning, and at 8.5% growth? Do you think the economy is overheated?
No, that's a good point. Remember, we both, in fact, if you read the RBI statement, it really echoes what we've said in the economic survey that, we should still view India as a recovering economy because other indicators of activity are still relatively weak. They haven't picked up as strongly as the 8.5% number or even the 8% number would suggest. So we should be, viewing India as a recovering economy, and so I don't think we're in any danger of overheating as yet.
Sir, and as far as now, since we have started to recover quickly, etc. So do you think there is a chance of a rating upgrade? We have been below, just at the brink of being below investment grade for a long time now.
Well, I think if you take, all that's happened in the last few days, the railway budget, the budget, the economic survey, now the RBI cut, I think all of these are suggesting that, the Indian economy has, is on its way to maintaining a healthy momentum. And the outlook looks good because it's backed by the data, backed by reforms, a budget that's going to hopefully push forward growth. So if the outlook is looking good, I think the rating agencies should draw their lessons from that improving outlook.
So what about the quantum of the rate cut that's happened today? Is that enough to spur the economy and support government in its agenda?
I think remember now we have 50 basis points, and I think that's very useful for the economy. And all rate cuts help. How much more there should be? These are questions that are very difficult to answer, but these are questions, as I said, will be driven by the data going forward.
Sir, could you please share with us the details of the new monetary policy committee? There have been different versions of it floating in the public domain. You can share some.
So the new monetary, as the budget speech made that clear, that discussions on the monetary policy committee will take place in the context of changing the RBI Act, and those things will happen in the months ahead. We have not begun detailed discussions on the exact nature of this monetary policy committee.
There are also some talk that the RBI governor will not have veto in that.
very premature. We haven't got to that stage yet. Yeah.
Sir, why there was no mention of NPC in the agreement?
In the agreement, I think the budget said very clearly that setting up this monetary policy committee will depend on changing the RBI Act. So it's very clear in the budget statement.
So,
Last question.
Among the other data points, RBI has been maintaining that fiscal consolidation is one key ingredient in deciding on rates. So have they now accepted government's new fiscal consolidation plan, which shows that deficit reduction will take more time than previously?
You see, the words you use, deficit reduction will take more time. I really want to emphasize that you're all trapped in your language. There is a reduction in the deficit from 4.1 to 3.9, yeah. But, it was relative to some notion. But what the important point to make is that I think not only is this an endorsement of the budget, I think that the RBI has actually very carefully highlighted what is important about the budget. One, the quality of fiscal adjustment, less revenue expenditures, more capital expenditures. Second, also that one has to view these things from a national, i.e. consolidated point of view. And there, as we said in the budget, and as I wrote, on Sunday, this is something that's new that all market participants must get used to. That with the 14th Finance Commission, 62% of all transfers, tax transfers, are now going to go to the states. So when you assess the public finances, you have to look at it from the point of view of the government as a whole. And there, given that states have been, and this is something that the RBI mentions, that the states have been prudent in managing their finances, what the transfer implies also is that all the fiscal deficit, revenue deficit numbers will actually look better than just by looking at the central government finances alone.
So one quick comment on the fact that the core data has come in. It's not very good. The TNR was around like 5 months low.
So that is conducive to a rate cut. Exactly. Yeah.
While giving your estimate about the GDP growth in your economic survey and later in the budget, 8.1 to 8.5%. So had you priced in this rate cut, or is it will be further boosting the GDP growth?
That's a good question. What we said in the economic survey was we have increased the growth rate for next year relative to this year by between 0.6 and 1%. So we forecast that growth will increase. And those increases were predicated on 4 factors. The oil price, prices being lower, reforms being undertaken, monsoon being better, and what we said was the likely easing of monetary conditions. So it's based on that.
Small offshoot to this, the savings rates obviously have also been a bit of a concern. So in your opinion, so what's a good target as far as the savings rate is concerned, and what's the roadmap to achieving that?
Remember, I think one thing you should remember about the savings rate is the savings rate depends a lot upon the growth rate itself. As growth, because we saw in the period 2002-3 to 2010-11, when growth picked up, savings also went up quite dramatically. So the savings rate will depend upon interest rates, inflation, but it will also depend upon growth.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.